Break-even point is the point where you don't have profit or loss. It's the place where you don't have profit or loss. Zero profit.
These are the transactions 1, 2 and 3, or maybe in the other order, that should be there in the group accounts. That's it, nothing else. What the parent had sold for 18, oh, I don't care.
This independent person is giving what? The independent person is giving a kind of an assurance. Right? It is assurance. It gives you an assurance. You, on behalf of someone else, you tell, okay, this is good.
The government may bring changes to the existing tax system through annual budgets. Therefore, staying informed.
For whatever the actions done by me, I am responsible to it, and whatever the actions done by you, you are responsible to it. That is because
you are giving the UK customer a 60 days credit. LKR has depreciated. Now when you are receiving money from him, you are going to get 3 million. You have made a 1 million forex gain.
Four unskilled labor hours instead of 3. So what's happening? Anyway, the output came. So cost reduced for this. But this output could be low quality. There could be issues. That is the non-financial thing. So what we are discussing here is, because of this mix change from the standard mix to actual mix, because of this change, what is the impact to the cost? That is what we called as labor mix variance. So it is same like material. So I have done 2 examples now. Your transportation cost is $75,000. Now, when you are allocating this $75,000 also based on the labor hours, is it okay? No. Why? Because transportation cost should be will be changed based on the location, based on the number of hours that you need to spend. So because of this, using one basis to allocate all the overhead expenses is not a very good basis. So that's the reason why we introduce activity-based costing. So in which circumstances we need to introduce activity-based costing? We have to introduce this when there are more than one expense and these expenses are changing based on different activities. How to find out the transfer price? So what that means, you have an external market. Your full capacity you can sell to the external market. You have an external market of 10,000 quantities. You can sell the total 10,000 to outside. In that case, your transfer price would be what? In that case, your transfer price, make sure your transfer price is what? Tell this internally without the packaging, because packaging is not needed. So you don't need to charge 150 because you are selling this without the package. So you can reduce this 20 and sell internally 130. Other one, let's say you have this product, right? This is your location, your other division here. Normally when you sell this one, you have to send a lorry. You have to send a lorry to the market, and that cost 10 per unit. So what you are normally doing is you sell this to the market, right, by paying 10 per this transportation.
customers, your customer portfolio, the amount of advertising you've done. There are so many intangible assets which go unaccounted when you look at your balance sheet. So always, I mean, there could be contradictions to this, but always, right? Most commonly, you would see that your purchase consideration is always higher than the fair value of the net assets of the company, because you have to account for the intangibles. Okay, it's always higher, right? And we can't put a point to this. We can't quantify why you're paying a higher value. We just know it's intangibles. So the name that we've given it is, we call it goodwill. The difference between the purchase consideration minus the fair value of the net assets is what we term goodwill, and it's an intangible asset. But the pref shares which you've classified as equity, which are irredeemable. So normally irredeemable is where you can't redeem. It has similar characteristics to ordinary shares, which is why it is classified as equity. So irredeemable pref shares are treated off balance sheet and off P&L. So we bring it here because that is essentially what is paid out of your shareholders' profit. Okay. So PAT minus NCI minus irredeemable pref share dividends. Now what is shares? For shares, what we're saying is it's the weighted average number of shares. Important concept. Weighted average number of ordinary shares. Now what do we weight it on is the next question. What is your weight? Okay, so for basic EPS we know earnings and shares. Earnings we know how we arrive at our earnings. Shares we know that we have to calculate something called a weighted average number of ordinary shares.
It can be a finance department, it can be aircraft, it can be a structural building, it can be a people, anything in this world, right? Anything in this world. So if there is a tri-party involvement, right? If there is a tri-party involvement, three-party involvement, so that three-party involvement first of all should be there. The tri-party involvement, there is a technical wording. So technical wording, Toyota, Shelton and you. So this is called as intended user. Intended user. This is the technical wording. Intended user. KPMG is writing a letter to the PwC and asking from PwC, look here PwC, I am proposed to be appointed to the Toyota PLC company audit, which is audited currently by you. Do you think that, or do you have any professional reason as to why I should not take this work? Whether do you have anything to tell me that I should not do this work? Professional reason, not personal reason. But in auditing there is a principle, there is a concept that whatever the effort you make, you can't detect the 100% material misstatement or whatever. So there is no way of auditor performing audit procedures to gather 100% misstatement in the finance statement. So always there is a gap, there is a expectation different. When audit is carried out, always auditor sets a lower material level than the normal material level for an implementation perspective. Right? So that means students, so this gap is always kept, since there is a risk in the auditing that everything cannot be detected. For an implementation perspective, when the audit procedures are done, selected, done, planning is done, we always keep a room for that. Right? Try to understand.
Is there an accounting period which ends in tax year 2? Here we go. What is the tax year 2? Now you have to understand. This is your tax year 1. This is your
tax year 1. What is your tax year 2? Your tax year 2 has to be 23, 24. Now they are asking the question, is there an accounting period which ends in tax year 2? This is the tax year 2. An accounting period? Yes. 30th 6, 2023. This is within this 23, 24. Keep in mind. Now can you deduct 450 of redecoration expense? Yes. Why? What is the reason? The reason is the repair is completed in March 24. Yes. Now you have to understand. Accrual basis, whether it is paid or not, it doesn't matter. What matters is it is relevant for that tax year or not. So make sure you understand this. Yes, the 450 is relevant for that year of assessment. Why? It is clearly said the repairs are completed in March 2024. So you are going to deduct this. And then finally you arrive at 5,300. Furniture relief, yes, this is important. We will come to this once we are moving on to the example.
Company's liability is shielded, or there is a veil protecting its owners from their liability. So whatever the acts done by the company, the liability is with the company, not with its owners, right? But this veil is not absolute. There are certain instances where the veil is being lifted and see who is behind this incorporated company. So like a bride covering her face by a veil, there are certain instances where the veil is being lifted to see who is behind that veil. We all know that person as a bride, we all know that he is as a company, but we doesn't know who is behind it. A de facto director may not appointed like that, but even though he is not so appointed as per the articles of the company, he is not formally or legally appointed, if yet he performs all the functions as a director. He gives instructions, he is looking into the audits, he is looking into the finance, he is giving advices to the employees, he is checking on the day-to-day activities. So if a person not being appointed formally, but yet he performs as a director, he will be legally deemed as a de facto director. And chairman are two different persons. CEO is a managing director, while chairman is the person who will be chair the particular meetings. The person who chairs the particular meeting, who holds the foremost position in a meeting, director's meeting, will be called as the chairman, and he has a casting vote.
Just because I added more debt in the first scenario, my WACC came down. Clear, right? My WACC came down. You are seeing it with some numbers. Right. Now what's going to happen next? When you add more debt, right, your financial gearing increases. Financial gearing increases. As a result, your financial risk increases. As a result, your shareholders start to demand for more return. Shareholders start to demand for more return. Right? Now let's say we have added more debt. Right? Value of debt is unchanged. We have added more debt. What is the conclusion under the traditional view of capital structure? The optimal gearing point at point X, where your WACC is the minimum. Out of these two opposing forces, identify the balance where your WACC is the lowest. You see the middle curve where it's the lowest point X, that is where your optimal gearing structure is. You have to go to the bank, convert your pounds to dollars. Now, are you buying pounds or are you selling pounds? You are selling pounds. Meaning bank is what? Buying. Bank is buying. So at what rate will the bank buy? If bank is always winning, lower rate or higher rate? It will buy at the lower rate. It will sell at the higher rate. Bank always wins. Bank always wins. So if you get a remittance from your UK customer in pounds, you go and sell it to the bank. You sell pounds to the bank. Bank is buying pounds. Right? Bank is buying pounds. Buying will always happen at the lower rate. Selling will always happen at the higher rate. Other way around.
Online accounting.lk